Before we begin, I need to note that certain statements in this video are forward-looking statements, including, but not limited to, statements that are predictions of or indicate future events, trends, plans, developments, or objectives. Undue reliance should not be placed on such statements because, by their nature, they are subject to known and unknown risks and uncertainties and can be affected by other factors that could cause actual results, developments, plans, and objectives to differ materially from those expressed or implied in the forward-looking statements. Good day and welcome to Lightning EV Talk, Lightning eMotor's podcast on all things commercial electric vehicles. I'm Nick Bettis, the Vice President of Marketing and Sales Operations here at Lightning eMotors, and I'm joined today by Tim Reeser, our CEO and co-founder. How are you doing today, Tim?
Great to be here, Nick.
Great. So today we're going to take a little bit deeper dive on a topic, a little broader topic, I guess is the best way to put it, and it's a topic we're calling "What's Up with the Commercial EV Market?" There's a lot of confusion, it seems like at this point, Tim, out there around what's going on with technology, with the business, with the vehicles, with services, all aspects of what fleet managers need to understand of what the future holds for EV markets. So we're going to take a bit deeper dive. You're very well connected in the industry, so we want to leverage that information and help educate our listeners. So let's get started today. So Tim, first of all, let's start off with the hot topic, right, which is pricing. So one of my favorite phrases is a lithium-ion battery is never going to be cheaper than an aluminum gas tank, even if it's filled with California gas today, right? So where do you see this going from a pricing perspective? Vehicles are more expensive. Do you see them coming down to parity? Is it always going to be grant-based? Where do you see this going?
So I think it's a very important question, Nick, that is still as relevant today as it was in 2018 when we produced our first vehicles. And after producing our first vehicles in 2018, we came out and said it's a long ways away before there is upfront price parity with a gasoline vehicle. But an argument at that time, this is before real significant subsidies were out, was that the total cost of ownership was still even then compelling. And that is true today, even more true today as prices have begun to come down. But I think a little bit, I remember in 2019, I was at the NTEA Work Truck Show on a panel, and the Department of Energy had presented just before that, and it presented a chart showing batteries were going down to $100 per kilowatt hour by 2021, I think it was, or 2020. And the bottom line is that did not happen. And in fact, batteries went up last year, not down, or this year in 2022. Battery prices have actually gone up, not down. And so that has certainly made everybody rethink what do these electric vehicles cost, because it's widely known, and it's certainly true with our vehicles, that the batteries are about half the cost of the powertrain. So as you look at this, batteries tend to really drive it. But I think it's also important to note the rest of it isn't nothing. And I constantly see analysts, and I saw it again last week with, when Tesla came out with their semi-truck, with people saying, well, the batteries are the only cost, the rest of it's basically nothing. And that's certainly not true. When you look at large motors, there's a lot of copper and other things that have gone up in terms of commodity and material prices in these motors. There's a lot of copper in the large wire harnesses. Even when you're running high voltage like Tesla is and like we are, you still have significant wire harness costs. You still have significant onboard charging costs as you move into high voltage. These are not commodity items. They're not sold in the millions or tens of millions like many automotive components are. So it's not just batteries, it's everything else that's not cheap either. But that's not to say that a customer can't get a very compelling return on investment because of a lower total cost of ownership of these vehicles, and that's absolutely true. So we've wanted from the beginning to focus people on the business case and not just the upfront cost. Unfortunately, some of our competitors came out with a very the aggressive upfront cost, saying that the upfront cost would be cheaper than gasoline right away or be cheaper than a diesel vehicle right away, and that just isn't true. And frankly, it's not going to be true for some time to come. What is true today is total cost of ownership is very compelling. And now when you add all the new grant landscape that has happened in the last, really is starting to play out in the streets over the next 12 months, it really hasn't hit the streets yet. EPA grants, FTA grants, and IRA grants, and state grants that are all stackable, like we talked about in our previous podcast. Now we have a real opportunity to take the risk off the table. So not only is the total cost of ownership compelling without these grants, but with the grants, it makes it a very easy proposition for our fleet customers to get involved and take the risk on a new product and a product that is relatively young in terms of its product cycle. So I think our message remains we were correct back in 2018 when we said these vehicles were not going to be price parity with diesel or gasoline. We continue to be correct on that, but we've also been correct in saying the total cost of ownership story does work and is compelling and continues to be. And now with the grant landscape, it's a no-brainer, frankly, with in many cases our customers getting free vehicles.
Right. And the technology too, we hear it all the time also on the technology side, right? That this is just a battery and a motor, right? You just slap it in and off you go and it's done. But what people don't understand is there's a specific cost associated with the hundreds of thousands or millions of lines of software code that we have to continually generate and maintain over time to keep these vehicles running at optimal efficiency. So
yeah, and I think that this is one major aspect that remains confusing is commercial vehicles are different in two ways. One of them is you have a constraint that does not exist in passenger vehicles called gross vehicle weight rating, and that constrains because the customers want the most payload, whether it's passengers or cargo they can get, and they also want the most range they can get, and those two things are counter to each other, and so that's often missed. I saw an announcement that Mercedes Sprinter would get 300 miles range, and the reporter that put it out didn't talk at all about payload, and that just makes me laugh because you can't talk about range without talking about payload in commercial vehicles. Yes, in passenger vehicles all day long, nobody cares whether you put 3 people or 6 people in the Tesla Model X in terms of weight. That's fine, but in terms of these commercial vehicles, if you fill them up with batteries and leave no room to put passengers or cargo in there, then it doesn't work. And we've seen, for example, some of our competitors have one of them has a van, and that van only takes 5 passengers, makes it a fairly useless van, quite frankly. But that's all you can put in that van because it is payload weight constrained because of the batteries that are in it. And we see the same thing across this industry regularly. Somebody advertising a huge range and leaving out payload, or somebody advertising a large payload and leaving out range. So that's one component that is absolutely significant in this space. The other one is all the customization, and this is often understood that when you think about, I use the example as an ambulance, but this is true across even our shuttle buses. You've got different size chassis that then require battery placements to be different, which means your brackets are different, which means your wire harness is totally different. And again, the wire harness can be a very significant cost to this vehicle. These are high voltage wire harnesses. They're custom to every vehicle because of all the different components. It's just not the same as the old gasoline or diesel world where everybody just tapped into the 12-volt system and called it good. So this is an area where we have done a great job as Lightning in differentiating ourselves in offering and supporting all this kind of customization in a cost-effective way.
Mm-hmm. Great. Well, this is feeding into the next question I had for you, which is a little more pointed. Let's talk about how our ZEV3 product compares to the Ford e-Transit. So an immense amount of confusion out there about how these two products compare to each other. 2B, Class 2B, the e-Transit is a Class 2B product. Ours is a Class 3. It only comes in natively and as a cargo van as opposed to a passenger van. Now, there are companies out there that are converting them, which we'll talk about. But explain to our listeners what you see the difference is in the marketplace.
Yeah, so I think, first of all, it's very important, again, to differentiate. Even if you're talking about a gasoline vehicle, there is tremendous difference between what has historically been an under 10,000-pound vehicle, a Class 2B or Class 1 or 2 or 2B, and a Class 3 and above. And you see that recognition now in the Inflation Reduction Act, where the Class 2 and 2B products get a $7,500 rebate, and the Class 4 and above get a $40,000 rebate. So it's not the same, and people are recognizing these tremendous differences. There is a difference in the way customers who drive these bigger vehicles expect them to be serviced in the service network because it is different. There's a way in which there's differences in the customization aspects. As you get into the bigger vehicles, you get things like refrigeration systems on these bigger vans. You get things like the nuances even in the passenger vehicle space where you have a wheelchair lift and you have rear air conditioning and these things that are certainly more customized, more challenging. And historically, a large number of upfitters have done that work, whether it's on the smaller or the bigger vans, but more so on the bigger vans. And those upfitters need a lot of support in terms of how you manage and upfit a electric vehicle because it isn't what they've historically done. And again, things like wire harnesses and the CAN bus and software integration and hardware integration are very complex for an electric vehicle, and they have not historically been for gasoline vehicles. So when we look at Ford's offering there, and frankly, even if you step into Stellantis has said they've got an offering in the Class 2B coming. Sprinter just came out. Mercedes said they've got one. Obviously, you also have GM BrightDrop. You have others, Rivian, Arrival, and others. So we call it the e-van wars. And
the pickup wars, right?
or the pickup wars, either one. And so, but it's a very different market. It's a very different model. It's the way the vehicles are serviced, the way the vehicles are charged, the range expectations, the expectation of duty cycle, the expectation of uptime. All very, very different for the larger vehicles, and that's why we believe we found a really great spot in the larger vehicles. So again, the E-Transit is a smaller vehicle. It's not as big. The E-Transit is sold entirely by dealers. There's a lot of what we do today that is direct, and there's some advantages to that in terms of we can support it direct. The E-Transit, you are at the mercy of a Ford dealer to support that product if they've got people trained up and ready to go, and that's not, I think, commoditized like many people would assume it is. And you see that if you watch the boards out there. This is the first winner for an E-Transit. The E-Transit only has, I think they advertise 67 kilowatt hours usable. And we hear many people say, oh, they'll increase it next year. Well, they've got the physics problem I mentioned earlier. If they increase it, they lose what little payload they've got because they are constrained by 99,900 pound GVWR. They can't go over that without significant changes in their regulatory driver requirements, regulatory approval requirements, and obviously powertrain requirements. So again, very different markets we participate in, different models in the way these products are supported, different models in terms of the way these products are sold. So yes, the E-Transit is, I believe, a nice product. I think it was underpriced to begin with, and Ford recognized that. They've already raised their price multiple times on that product, and I believe they will continue to as they recognize what I said earlier, that the rest of the components are expensive, and almost everybody, well, I think without exception, everybody who's come out with a product, including us, discovers after you've been out a while that you underpriced it or underestimated what it was going to cost, and that's been true with everybody. And that's why I also look funny, at the people who haven't yet produced a product when they say what their price is going to be. And then, yes, it's the customers should go with that with a large amount of skepticism because so far until people have produced a product, they don't actually know what it's going to cost. And in terms of these EVs.
Yeah, we learned this lesson 5 years ago.
We learned the lesson 5 years ago. Tesla learned the lesson quite a few years ago. They'll now learn it on their semi-truck. Right. And Ford's learning that lesson live. But this is also the first winner for Ford. We've now got, this is our fourth winner of collecting telematics and analytics on our vans, and we know the impact of not just temperature, but temperature versus payload versus driver behavior. We've got all that data, and we know what it is, and our customers have already been through that scenario planning of how much battery capacity do you need, and that's what led us to come out with our 120 kilowatt hour version of our van compared to, like I said, Ford advertises a 67 kilowatt hour, so nearly twice the battery. And again, we could do that because we're on a bigger van, a higher GVWR van. We've got more weight rating to play with, and therefore we were able to put more battery on it. And some of that came from our real-world Canadian experience and real-world New York experience where we discovered, hey, when you get to wintertime, you need more battery capacity. And so we've learned that over the last 5 years, as you said, Nick, and many of the Ford customers and Ford products are just on their first year beginning to experience this, and they don't have the same room that we did because of gross vehicle weight to significantly increase their battery capacity. So I think we'll continue to differentiate on battery capacity, on weight capacity, on customization ability. We're working with great partners like Leader Ambulance to make this into ambulances. and other refrigeration products. We've built some refrigerated vans that, again, highly customized, and we continue to believe, and are excited about that. We've got a great passenger transit van offering in that product that has, up to 15 seats, and not just 5 seats or, significant seats plus wheelchair lifts. So we remain excited about that, and as we look forward, we won't just be Ford. I think people will be surprised as we come out with some of our offerings. We've went to the market and said we're going to have our e-chassis, but we're also working on what bodies are going to go on top of that, and working to continue to diversify. So we'll have more than Ford and GM, and I think people will be excited in what we can do, and that will also allow us to have even greater GVWR opportunities, which means more range. It means we can push to 300-mile range on a vehicle and still have payload, or have a tremendous amount of payload or passenger capacity, half again more than what any of us can support today, because we'll have more GVWR capacity.
Right. We'd be remiss, too, if we didn't mention the school buses. So Type A school buses on the ZEV4 platform with Collins.
Yes.
Collins Bus.
And obviously, as we look forward and look at what the IRA brings in terms of an additional $40,000 grant that many of them didn't, when they did their budgets 2 years ago, didn't know they'd get an extra $40,000. They didn't even know they'd get the EPA money. But now there's EPA money plus an extra $40,000, plus in the state of Colorado, there's a new $60 million fund that starts on, in January, so very soon from now. So you'll have a new school bus funding in the state of Colorado. There's also school bus funding in other states as well, California and New York. And these are, again, all stackable on top of IRA, on top of EPA. So even if you don't get one of those, even if you don't get EPA, you look at the state funding plus IRA, in many cases the customer gets a free electric vehicle. So we like the school buses, the Type A's are Class 4, so they fit into the IRA. Again, another difference with the Ford E-Transit, it's a Class 2. It only gets $7,500 in IRA, not the $40,000 we get on a Type A school bus, not the $40,000 we get on a Type A shuttle bus. So some significant advantage to the larger vehicles, and we continue to move our focus towards that because it's something we're good at and highly differentiated in.
Yeah, and that's an important point. You mentioned a $0 bus. The math actually adds up to school districts, and who doesn't want to support our school districts with cleaner air and free transportation for their students? The math actually adds up, and you can get to a $0 Type A school bus fairly easily.
Fairly easily. And I think, to your point, not only is it a sustainability proposition, but they truly are better vehicles. The drivers enjoy driving them better. The regenerative braking adds to the safety aspects of the vehicles. And it's much, much quieter, which people really like. And like you said, when you're, even from a bystander, even from a parent dropping their kid off, you're no longer having to sit on the curb and or stand on the side of the road and smell the fumes coming out of these vehicles. It's really much more pleasant experience.
It really is bad. So we talked a little bit about some of our competitors and some of the other vendors out there making kind of wild claims about functionality, about efficiency and range and such, payload, for example. How should our listeners protect themselves from that misinformation, or that, let's just say, overly optimistic information?
So I think the first one is go with somebody. There's now options like us where we've got over 3 million miles on the road. We can show people real-world telematics. They can talk to real customers of ours. They can read real case studies on our website from DHL and City of Porterville that talk about real-world efficiency and what they're really getting. And I think customers need to move away, and fleets need to move away from believing the hype. I know they want to. I remember the arguments I had with several fleets in 2018 who said, when I told them, hey, you aren't going to get 500 miles range on a small battery. You aren't going to have any payload left if you go with somebody who puts that kind of battery in. And yes, it's going to cost more. And they said, no, we'd rather believe your competitors because we want it to be cheap. Well, it hasn't turned out to be cheap. And I think this is one, from a physics standpoint, do the vehicles work? Yes. Actually making a good electric vehicle vehicle, especially a prototype one, is not turn out to be the hard part. The hard part has been making it cost effectively. The hard part has been handling all of the customization to support the wide range of applications in commercial vehicles. The hard part has been making a service network and having people who, having service and support. The hard part has been having the data around and the battery capacity options to manage cold weather and manage heavy payloads and manage refrigeration systems on these vehicles. Those have been the hard parts. And so I would encourage fleets to look at the folks like us that have done it before and to put a wide angle of skepticism around the people who haven't actually done it. And we see this over and over. These people anybody who hasn't done it can make all sorts of claims. But we've seen today one of our quote competitors that has yet to make a product had to come out last year and say, and they won't even have a product in 23 and maybe not 24. So, and some of that it isn't because it's technically difficult. It is because it's very, very cost challenging in terms of how do you get the price down to what you've promised these customers in your backlog, and also from the standpoint of the capital cost to build the tooling, et cetera, to make all of this work. So I would encourage customers to put a really, a lens of skepticism around anybody who doesn't currently have vehicles on the road, can't show them real data, can't speak to real customer case studies, because it is everybody else, the claims they're making simply aren't there. Nobody's reinventing batteries. I think I'd like to transition a bit into, where a battery's going and other things. But the bottom line is battery invention and other things aren't happening at a pace where a year from now somebody's going to all of a sudden offer to the market something that is, from a physics standpoint breaks all the barriers, or something that from a cost standpoint breaks all the barriers. And like I said, in fact, many people had assumed prices would come down. In fact, they've gone up in 22. So be very. I think we all have to be put a significant amount of skepticism around the people who put costs out there that are way out of the norm, and that haven't actually made a vehicle. Until they've made a vehicle, they don't know what it costs. Is the frank truth, and we've seen that with everybody. Until they've made a lot of vehicles, we don't know what it costs. They don't know what it costs. And the same thing with range. Until they've actually got vehicles on the road and can show you telematics, don't believe any of the range claims, because they have to be put with a grain of salt. Range has to be couched with the context of how much GVW are, how much payload do we have left, how much payload are we carrying in a real world, what's the real drive cycle, what happens in the wintertime, and that has to be there. And so all these people making crazy claims, even large OEMs, the Fords and the Mercedes, as we enter wintertime, all of them are going to have a reckoning around what they've promised and what customers are actually seeing.
Right.
And we see that in the passenger vehicle space happening now, and it's happening it will happen in the commercial vehicle space.
Yeah, and these companies aren't going to last too long taping $10,000 bills to their vehicles.
No,
the prices are going to their prices. Those wild prices are going to have to come up.
They
like
have
you
to.
said, we're already seeing that happening. So
yes.
So let's do transition to some technology. So very frequently we hear, so what's the story with fuel cell electric vehicles? What's the story with solid state batteries? When are those things going to be available to get us longer range with higher payload? And should I just wait until those things are here to start to transition? So what would your advice be to those folks?
Yeah, I think it's a very important question that we do hear a lot of people asking. I think that the first one to recognize is we do see these things happening, and so we've built into our product plan. When we look at fuel cell electric vehicles, we've built our products such that we can support a range extender fuel cell, hydrogen fuel cell range extender, as part of our platform. So we don't have to redesign our product to support fuel cell. But the frank truth is most of our customers, outside of a few, most of our customers don't have a place to refuel a fuel cell vehicle. So regardless of the long-term physics discussion or debate around what's more efficient or what makes sense, the real question is if you don't have fuel, it's a moot point discussion. If you can't buy fuel for the vehicle, it doesn't matter whether it makes sense or not. But from our standpoint, we designed our platform from a software and a hardware standpoint to be modular. So whether we put on fuel cells and fuel cell tanks or more batteries looks the same to us. The same thing as we look at new battery tech. We've designed it to be modular. So whether we're putting in NMC batteries where we started and now moving to lithium iron phosphate, our ability to plug and play is strong. Now, it still isn't overnight. Even when you've built it to be modular, there's still work to do when you change out batteries that isn't trivial. but we can do it much faster than anybody else does because we've built our product modular. The same thing when you look at solid state, and I love what's happening with solid state. People like Solid Power who are here in Colorado doing a superb job from a technology development, and we like what they're doing, and we've built our platform to support it. But as we know, nothing in automotive happens overnight. So those platforms are still being developed. As they're in prototype stage, we'll be testing them and developing with those partners and making sure they work in our application. So we'll be as early as anybody to have them. But today, we believe it makes sense to have products out, and especially given the amount of new incentive money, customers would be absolutely ill-informed to not take advantage of these incentives right now and start getting into the technology, building their infrastructure to support electrification, understanding what they need in terms of electrification, taking the low-hanging fruit off. It just makes sense right now given the incentives and given where everybody's at. And it's going to happen for all of us to scale up because we've all suffered from this chicken and egg problem that we need more volume to get the price down, and we need the price down to get more volume. The grants now solve that interim challenge. So now we've solved the chicken and egg, and we can get volumes, we can get the price down and get the volumes up. And the customers who don't take advantage of that will be left outstanding. And so we really encourage people, take advantage of what we've got now. Yes, over time, we'll all work to continue to include the latest technologies, but none of those are going to happen overnight. Nobody's going to miss out on solid state batteries buying today and thinking it's happening tomorrow. It's still a ways out.
Right. The other piece to that too is as far as whether to wait or to go now, or start now, is the mandates. So there's a lot of mandates out there that all vehicles being sold by a certain date, 2035, 2030, 2040, will have to be electric. And as you're planning your fleets, the future of your fleets, you got to be thinking about there's going to be a glut of demand towards the end of that section. And you may not be able to get buses at that point, or cargo vans.
Yeah, and I think for the first time we experienced this supply chain challenge where many customers, you've seen it about Type A school buses, we've seen it about shuttle buses. They simply can't get the vehicles. The customers can't get the vehicles they need to run their businesses or their schools, and that risk exists, to your point, as you move out into electrification. The other challenge is many customers who've electrified have realized there are other complexities to the business ranging from how do we want to manage the energy. And obviously that's something we have staffed up to support our customers and provide a deeper integration and support of that integration so that charging and infrastructure aren't as big a challenge for them. But nonetheless, some of this can take a bit of time, and customers need to start now because the customers who are starting now are realizing, hey, this doesn't happen overnight. It takes a bit of time to get the vehicles you want. It takes a bit of time to get the charging you want. It takes a bit of time to get the infrastructure to support your chargers in place and look at the options like, do I use utility charging or utility power to power my chargers, or do I look at a microgrid solution like we're doing for some customers? So all of that takes some time, and so customers need to know they really have to start this year because, as you said, it's not just a question of the carrot, i.e. grants and subsidies. It's also a question of the stick. There's real live regulatory requirements coming down, and customers won't have the option anymore to buy a gasoline vehicle in the near future.
Exactly. All right, last question I've got for you is about longevity, company longevity. So I don't think there's any doubt when you look at all of the manufacturers out there, maybe the condition of their companies from a production and even a financial perspective, that there's going to be some consolidation or some downsizing of the size of this industry. How do you see this shaking out, kind of market wide in the next five years?
Yeah, and so I think one of the things is we get a lot of questions from customers at the moment, and I'm hoping, by the time people read this podcast, they may look back and say, man, that stock was cheap then. But at the moment, our stock's cheap. And I think in hindsight, we'll look at it and say it was cheap. But at the moment, it's cheap. And a lot of people assume or correlate that to the health of our business. And at the moment, it is uncorrelated. We have a healthy business. Our a public company. We release earnings and cash on a regular basis, and we still have significant cash. And so we we absolutely are confident in our sustainability of our business and our ongoing efforts to build the business. We see a very solid path for a sustainable business, meaning we know that this is a business with our volumes growing, that we will make good gross margins, that will be a sustainable business. And we know we've carved out a really nice large niche for us, or groups of large niches for us in these commercial spaces, where the assumptions people have made that, that the legacy OEMs will just all of a sudden click in, that's not turning out to be true, and that it's instead these legacy OEMs in many cases are partnering with us, and for good reason. So we're confident in our business model and our business plan going forward. We're confident in our ability to get to scale. We're confident when you look at the demand of how quickly we can get to scale. We're confident in our ability to continue to make sure we are funded as a business. So ongoing, we want to leave our both investors and customers confident that yes, we know we're successful. Yes, we see, as everybody else does at the moment, that we've got what I believe will look back as a temporary low in the stock price. But we see very much a very bright future for where we're at. We know we can get to where we need to be. We know we can fund what we've got to do. So we have a high level of confidence. We've been doing it long enough now to know what things cost, to know where we've got to go. We've already got our manufacturing building built. So a lot of the CapEx that other people still have in front of them, where we've got competitors still building factories or attempting to build factories. And like I said, just like with vehicles, many of them don't even know what that's going to cost. Inflation has driven up the cost of building factories and buying the CapEx equipment. We've already done it. We've already built the factory. Back when it was cheaper to build a factory 2 and 3 and 4 years ago, we've already built our first vehicles. Many, we're already on, I think, over 500 vehicles on the road now today, and so that sort of change makes a big difference in terms of our ability to scale and our confidence in our ability to still be a sustainable going concern company, and in the long term future.
Do you see any consolidation coming as far as some of these companies, these other companies, kind of coming together, merging, acquisitions going on?
Yeah, there has to be. When you look at the math, I think people will surmise from this conversation, scale is a big deal, and scale the customers need people with bigger scale, and all of us we need to fill up our factory. We built the factory. As we utilize the full factory, each vehicle gets cheaper with the more vehicles we build. So also, there's an experience ratio. It's significantly cheaper today for us to build a vehicle than it was 3 years ago when we first started, because we've learned a lot. Our supply chain has learned a lot. Our supply chain is maturing and has matured, but it's not mature yet. So we see a lot of low-hanging fruit to continue to reduce our expenses and reduce our costs at the same time, increasing volume. So there will be, but that increase in volume is the biggest driver. And so absolutely there will be consolidation, and there'll be some that go out of business. You saw, Electric Last Mile that was building a smaller van. So we've already kind of had one go out of business. That again is a market we've chosen not to be in because we thought it was a very difficult market, and it was their goal was to sell the cheapest. And I think anybody who wants to go be the cheapest in the small van space has got a tough situation out there. We've chosen to take a value proposition and be the premium player in the larger size product and larger size markets.
And the honest player as well.
And the honest player, exactly.
We've been telling the truth on what these vehicles
what the
were going to
prices
cost and what they could do for 5 years now.
Exactly, since 2017, and people are beginning to realize we can be trusted. And so I definitely think that'll win out, but we see consolidation. We do. We've told the market we expect to be a consolidator and not part of consolidated, but obviously we are very aggressive and active in looking at that, and there's no question in my mind there will be significant consolidation in the next 12 months.
Yeah. Well, there's nearly $10 billion in funding that's available in specific markets that we play in over the next 5 years.
Yes,
4
and
years.
that's just school buses and transit. Doesn't include work trucks, last mile. That's just school bus and transit. Has over $10 billion, and that doesn't even include the new IRA. So it's a tremendous opportunity right now that is never existed before in the United States, and we believe we'll look back on where we are and where this industry is 2 years from from now in just kind of utter amazement at how fast it's taken off and how much, that it becomes the norm. I really believe 2 years from now, nobody will be talking about, do I buy a gasoline or do I buy an electric? There's only one choice. They'll be buying electric vehicles because, as I've said, that yes, the total cost of ownership is very compelling, but more than that, the products themselves are very compelling. They're just much better products.
Great. Well, Nick, that's all the questions I've got. Do you have anything you would like to add today?
No, thank you, Nick, for putting this together.
Well, thank you for joining us today, and thank you all for joining us on Lightning EV Talk. We hope to see you on a future episode as well. Have a great day.
Have a great day.